Good morning, good morning. Predicted Trades fam, hope everybody's doing well. Let's dig on into a review. I'll go ahead and remove our beast study for now. So, let's just review the whole week since we're on Friday. We came into the week on that big gap down, which spanned, 4180, let's call it. Back up where we closed at 4227. Excuse me. So we had that big gap down, sold off Monday. Tuesday, tried to get going, rejected the mean for a little more selling off, but nothing too aggressive, and we did not make it down to the next zone that I had below. In fact, we settled, came back up, fought back above that 4136 key level, held it, and kept trucking. That's why from Wednesday on, we have been going long on most names on the market, and it's paid off each day. We've had great longs in the morning. We run into squeeze tops, key levels, and we have dramatic pullbacks, but end up settling and pushing for more. Yesterday was no different. Had a little dip in the morning, down to about 4150, and held our trend lines that we established from the lows on Wednesday. Held that trend line, popped up to our to the mean, to that 4165, and our next key level 4183, right at the top of a number of squeezes, as we should always be ready for. After a good push to squeeze tops and key levels, be ready for that midday reversal. We've been getting it every day, like we always seem to get when we get near our squeeze tops and bottoms. So yesterday hit that squeeze top, rejected and came back to the mean, slipped it enough to hit those squeeze bottoms, but then ultimately held the mean and started pushing back through VWAP to this little zone that I made from pre-market action that provided a nice pullback to VWAP again for that last leg through the day. Once we took out that zone and hit squeeze tops, we did have a little pullback to that zone and then completed that last leg up to 4200. Even got a few prints up there. Did not quite slap our 4205, and really we ran right into the trend line from the highs that started this sell-off. So not surprising to kind of stop right around there. And also not shocking to see that we are having a slight gap down into our economic data release that's coming out at 8:30. Nice segue into, let's take a look at our economic calendar. So yesterday we had jobless claims, we had some GDP, they were favorable, slightly better than expected. Today we have a whole bunch of economic data coming out. Price index, price index, disposable income, consumer spending, nominal personal income, consumer spending. So, we've saw some GDP numbers. We've seen some inflation numbers that aren't on the rise and maybe waning a little bit. Today's information is going to be a little key because it's going to be price indexes and how our consumers spending. If this is favorable, it's going to keep lending to the upside that we might be seeing inflation on the wane. We do have Powell speaking at 10 a.m. at Jackson Hole. So I could expect the market to make a nice move to recover up or back down to a range and then kind of settle and chop into that 10 a.m. when he speaks. Or, I'm sorry, we could even just chop for the first 30 minutes, waiting for him to speak before we get going. That actually seems a little more likely. We also have that University of Michigan Consumer Sentiment Index coming out and 5-year inflation. So just a little bit more around inflation. Next week, it's worth taking a look to see what we've got on the agenda. We've got PMI on Wednesday. That's kind of the big one. Tuesday, we've just got a little bit. Thursday, initial jobless claims as always, and some PMI and non-farm payroll. So we'll have some economic data coming out here during prep that we can see if they're going to have a positive or negative reaction. Positive will likely start pushing us up through the overnight trend lines, back above 4190 and this daily 8, and back near where we closed. If it's not so favorable and the reaction is not so favorable, then we will slip back to this zone that we bounced at yesterday, and if that can't hold, then we're coming to test these trend lines from the lows. So overall, overall thesis, if we can remain strong, start to push through this trend line from the highs that started this little sell-off, we can try to push back to filling the gap, which would be kind of pushing back to that 42.28, 42.30, 32, right around that zone. We have to take out 4200, 4205, the daily 15 on our way up there. Also that first Keltner up from the mean that we just pushed off of yesterday. Only down 12 points. Yep, we can totally get up and fill the gap on an ATR. So we know what to watch for. We're being held down by this trend line. See if the economic data starts to push us, which would kind of give everyone the sign for continuation to the upside. If we can't get through the daily 8 or aren't above it when we start the cash session, likely going to come back to test 4183 and this little zone. If that starts to give out, coming down to test trend lines, 4165, the daily mean. Past that, we know exactly where it's going back to. Double check our POCs. My goodness, did my screen get shrunk over here? There we go. All right, we still have POC up above at 42.73. That's the 10-day. I know the 15-day stepped down, but it has also kind of been hopping around. So on to NQ. One thing I'll say about UVXY, since I've got it over here, staying below 9.5 today is very helpful to the upside. Key level 9.5 and 10. We want to stay below those and start pushing below 9 again for the upside. On NQ. Kind of the same thing yesterday, dipped down to trend lines from lows. Definitely come in and draw your trend lines because they can be very helpful. So pretty much hit the trend line from lows yesterday. That squeeze bottom, and right back up to the daily 8. We are now pinned between the daily 8 and the daily 21. Yep. If we slip the daily 21, likely coming back to this bounce point around 13,050, the bottom of this trend line. We could even dip down to test 13,000 again, that last bounce point right below this one. Big key psych level if we are going to see some profit taking. But as long as we can hold the daily 21, looking to see NQ get up through 150 and the daily 8. Push up to our next level at 220, kind of the top of filling that gap. 250 would be basically filling the gap. And carrying through that, it'd be the daily 15 and 13,300 above. If we start to lose the mean and our trend line, 13,000, then we're likely going to slip right back into this range around 902. 902 level. Maybe I'm thinking of YM. But we'd slip back down to where we consolidated around 900. Ready. For the ready. Got up to that daily 15 at the end of the day yesterday. Coming back to the daily 8 and where we held late day at VWAP. So looking for that to hold as well on the cash session. You can see kind of a trend line here as well below around that 1950. And we're starting to break out from trend lines from where the sell-off started. I've got one more at the extremes and one a little less extreme but still tags the highs that we most recently rejected. So we have arrived back into this little channel, trying to push through the first and then the second trend of resistance. So let's see if we can hold the daily 8, push on through, get back to that daily 15 above and that Keltner. We technically have already filled the gap on the ready. If we look at where we closed, that's basically where we've come back to. So if we can hold and keep pushing through the daily 15 in Keltner, we've got the daily 200 above at 1990, which just gets us back to kind of that consolidation before we sold off. If we lose the daily 8 on the ready, going to at least be a little leery long, just because we might be seeing the reaction in the ready first. But if we start to lose the daily 8 and slip below 1950, we're kind of getting close to engulfing yesterday, with the lows being around that 1941. If you remember, we marked this 1941 from pre-market highs and cash session highs for the last few days. We got above it. We needed it to be support yesterday, and it was. So if we lose the daily 8, likely going right back to it, which will engulf. Basically, only 1950 could give us a bounce before we get there, and then the 21's right below that. YM. Yeah, it was YM. So YM, this 32,902 been very key. It allowed us to kind of bounce and hold all week. We did get below it for this little bit right here, right? But in a way, if you think of all that price action underneath it, they could have, or they basically trapped a lot of sellers and then started pushing right off away from it. They came back and defended it repeatedly and just kept pushing. So for today on YM, want to see these pre-market highs just like we marked that level on Ruddy. This pre-market high from Tuesday is where we've started to bounce. And this high from Tuesday cash session, creating a nice zone that we'd like to see be support for YM if we start to dip down to retest pre-market low, this trend line. If we start to lose that, likely coming back to the daily 21 and this 30,000 psych level, and below that 32,900 if the reaction is not favorable. But if we can keep trucking, looking to get through this daily 8 that we basically stopped at yesterday and has been resistance pre-market, looking to get through that, through 33,300 and push up to the daily 15 at 400. Let's see, filling the gap would be getting all the way back to, let's just call it 650. So we still got some work on YM to get up to fill the gap. It is still below trend line from all the highs that started this sell-off. So ultimately, the daily 15 and that trend line is what we're trying to, the upside targets for YM if we can start to break out over this daily 8 and yesterday's high. But if we start to break down, we know where we're going right back to. Apple. Slowly breaking out of these squeezes, but it sat for so long. Now it's at a 4-hour squeeze, and we know how that can be. So, 170, 170 and a half going to be very key today for Apple. Let's see if we can hold this trend line in this up channel long enough to take out that 170, 170 and a half just above the pre-market high, and at that 4-hour squeeze top. If we can get through that, go into the zone above, which gets us back to filling the gap. Let's see if we draw a trend line from highs. We've already gotten through it. So if we start to lose our trend lines, this channel that we're in, carrying us up, start to lose 169. And 168.7. Then we're coming right back into our range. We did not quite hit the daily mean, but it doesn't mean we have to. But I will say that that mean is sitting right down at that 4-hour squeeze bottom. So even though the market's had a great push, Apple's been a little lackluster. Let's see if today it can hold the daily 8 and 15. Hold this trend line, pre-market lows, start to push into our zone above through that 4-hour squeeze top. But keep an eye, if we start to reverse at that 4-hour squeeze top, lose this trend line, it could set up some slipping. And remember, this economic data is coming out soon. We could have a negative reaction and just start taking things out. So we know how to react. AMD, big old push yesterday. Epic push right off of this key 93. Talked about this in prep. Since we got below it, rejected, and we were coming right up to it pre-market, I said as long as we can get above it and hold it, take off. And that's what happened. Straight up to the daily 21, daily 8, and this 96 level. Got through it all the way to 98 almost. Not quite, 97.6. We've got the daily 15 sitting right up at that 98, and we're trapped between these moving averages. So very simple. As long as the market can hold up, looking for AMD to hold 96, this daily 8, daily 21, just below. So call it 95 and a half to 96. as support now that we're above it, in a bid to push back to 98, 99 and a quarter, and 100 psych level above. We also have that daily Keltner right there, probably cutting in the middle of those two. So we got our upside targets. If we start to lose these moving averages and lose the mean, probably right back down to 93 if the market's going to look weak and engulf. Amazon held that gap level or that gap zone from earnings perfectly this week. Yesterday was decently strong up to the daily 8, back down to the daily 21, and right back to the daily 8. We're going to be trapped in between them again today. You could draw a trend line from some of these pre-market and cash session lows. Just like that. Ooh, starting to get below them a little bit. So something to keep an eye on Amazon. Let's see if we can hold 136 for support. The last bounce point of the day. We also have 135.5, but the mean's pretty much right there as well. Probably going to be stepping up to it. So ultimately, I guess let's just see if we can hold the mean, push through the daily 8 in a bid to get back to 140 where the daily 15 and the first Keltner up sits. We do have a 4-hour squeeze in place that just started to pop up, as well as an hourly at that 137.5. If we reject there, we'll probably come back to 135 at the bottom of that hourly squeeze through that, probably back down to our range. BA. Oh my, BA's just been on a tear. Yesterday it slipped down and slapped that 164, 163.8, our key level. Took off through the daily 8. Didn't even need to get the daily 21 on that dip. Got above the daily 15. Pulled back off that Keltner and then held the daily 15. So going to be opening right between that Keltner and the 15. Let's see if the 15 can hold at 166.5. And keep us trucking up through 170 and a bit to get up to this daily squeeze top. I actually like that idea of BA getting up to this daily squeeze top by the end of August, because we know the seasonality of September can be, a little bearish sometimes. So would be interesting to see us hold these means, push off it to this daily squeeze top as we move into September. Then we could see VA go from squeeze top on the daily back to the bottom, which will step up, giving us a higher low. So could be interesting to start tracking that daily squeeze on BA. Cat. Huge old day yesterday. Big old day and a big old sell-off back to a key level and a higher low. You can't let a big sell-off like that scare you, because we're right back up she went. Held the daily 8, still pushing higher, 199, printing, pre-market. Next stop, 200, 201.5, 204, the daily 200. But we got to get through 200. Which can provide some resistance, plus if market starts to roll. And if CAT starts to lose 196.5, likely coming back to that daily 8, and if that gives out, back to our key level. Google, what are you doing pre-market? Well, looks like the entirety of the NQ gap down is NQ. Well, right back to the daily 50, kind of engulfing yesterday, not loving this. But if market has a favorable reaction and starts to go, I mean, this has to be somewhat news driven, I'm thinking, to engulf yesterday while the market's only down a little bit. So someone let me know in the chat if, in the YouTube chat, if there's anything going on with Google. Pull up the YouTube chat. So, I don't know. Let's see if Google can hold the daily 50. Its squeeze is nice and wide now. Looks like we have a 4-hour and a daily in place, starting to form around Google. So, let's see if the daily 50 can hold. If not, coming down to lows and this consolidation around 113. And if the daily 15 can hold and the market is going to push today, this could be a good catch-up trade back to the daily 21 and 8 above. But we're in between these moving averages. If we can get through those up to 118. GS nice and strong as well. Already broke into filling that gap. Already printing up near the lows. Now that we're above the daily 8 and 15, need those to be support around 346. And if we can keep pushing, it's back to 350, kind of our last rejection point before we gapped down. JPM made it back to all these moving averages. As long as we can hold, looking forward to get back up to 120. Again, the last sell-off before we gap down. But JPM also completed filling the gap yesterday. So could lend, if the market holds and wants to push, since the gap's already full, could lend to a nice pop to get it back to 120. That daily Keltner and where we last sold off from. If the market starts to slip and we lose these moving averages, it could go quick back down to the daily 50. Meta, decent day yesterday. Made it up to the daily 50 and daily 8. You know, not a crazy day, but we can say at least that it did fill the gap already. Starting to test that gap now that it's above it at around that 167. So looking for this 166.2 to 167 to hold as support to send us back up through the daily mean to get to the daily 15. If we start to lose that support, back down to this Keltner that we consolidated at. Microsoft. Again, kind of lagging, but it did make a good move off of this squeeze bottom yesterday, right up to squeeze top. We do have a 4-hour squeeze setting in on Microsoft now, right at the daily mean. So if we get a push, we're looking to get back to that daily mean around 280, that 4-hour squeeze top, that daily 8. Probably going to be the extent of where Microsoft gets to today. And it doesn't get us close to filling the gap yet. So not a favorable look on Microsoft. Still need to get back to 285, that daily 15, to truly fill the gap. Ooh, I like that. 830. Let's see, what's ES doing? Another key point from yesterday, as we try to read and gauge these things, right? We pushed nicely to that level. We held, I marked a pre-market level. You know, cash session, we gave that out, but as we came back, you want to hold that, especially as we were trying to do an uptrend, right? High or low. So we held there. We ran into that pre-market high resistance. So I've made a level of support, level of resistance. That pullback that held a higher level, higher low, and all of our moving averages on most time frames was a great sign and entry to go long So definitely why I keep calling out moving averages on multiple time frames and tracking them. I would say we have our favorable scenario. So already above 4,200. Well, let's see if we stay below yesterday's high before we open at least. Maybe give us a little dip back to our zone. But looking favorable. So Microsoft going to complete the journey before we open. Let's see, closed around 278. About a 5-point ATR. Just call it 6-point for fun. Yeah, we can get back to try to fill that gap on a full ATR day. Netflix just kind of stayed pinned between the daily 8 and the daily 21. If we can start to take out that daily 8, it can make a quick move up to 238, 240 for this 15 and Keltner sit, which gets it back to filling the gap. You know, also to downside scenarios, I mean, we can always run into too many sellers and come back. So if we give out that daily 21, likely going to engulf back down to 226 in the middle of that range. NVIDIA had that earnings, reaction, then recovery. Something very key to pay attention to. We were at the bottom of a daily squeeze. They reacted to a Keltner, and then by pre-market, we're already pushing back into that daily squeeze. Great sign to go long yesterday, maybe even into next week, to come from the bottom of a daily squeeze, possibly up to the top. Let's see. We made it up to the daily 21 and 8, looking for those to hold, push through that daily to the daily 15 and push through 180, which fills the gap. I'd say we pretty much filled the gap yesterday on that late day push. So let's see if we can hold the gap, pre-market low. These moving averages keep trucking through. 180 in the daily 15 with a goal to get back to 185. QQQ. As you can see, didn't quite make it to our trend line from the highs of last week, but starting to tap them now. So, let's see if we can hold at least 318. Even though we're getting a favorable reaction, we're not taking off like crazy. We're already wicking back down to that trend line. So we could still have our dip to test everything I've been saying. So if we do get a little dip, looking for 318 and pre-market low to hold. If it doesn't, we're coming back to this zone where we could still catch a bounce as we gain energy to try to take out this trend line. If we can start to get through that daily 8 and that trend line, we've got the 15 and Keltner up above 323, 324, psych level 325. No daily squeezes or anything in place. There is a 1 hour that's starting to form. But we're not seeing it yet. It's probably going to be near 320 and probably right below pre-market low. So we'll see it a little bit better as we get closer to open. Roku. Oh my god, I broke out yesterday. I'm going to shit on this one, and then it'll probably take off today and get back to the daily mean. That's your upside target if you can get through 75. It basically filled the gap. 76.5, that last sell-off point, and gap down. So you've got a gap and the daily mean up above as your target. And if it gives out 70, let's say 71.5, right back down. Wow, shop finally made some moves this week. And tight squeeze. So probably not going to do much today. But if it can break yesterday's high, back to the daily 850, maybe the 21, 36, that last sell-off point. Let's know. Big reaction on earnings, pushed a little further, but it's up outside of third Keltner's. Nope, I'm sorry, third Keltner stepped up with everything. It topped out from second to third Keltner yesterday. That's a funny little jump. I like it. So, let's see if it can keep pushing through that Keltner to get to 200. It's been so long since I've charted it. Most of my levels sit up with the daily 200 above. Can she keep trucking past third Keltner and get to that 200? Yeah. She'll drag up the mean, probably get it, up above 180 for the next pullback. But can also pull back off of 200. Watch that gap from earnings, just like Amazon held its gap from earnings. Yada yada. SPX started to peek its head into that gap fill yesterday. We're still dealing with a little bit of a gap down. So let's see if the daily 8 can provide support at 41.90. We've got key levels at 41.85, 41.80 to hold us for support. Yesterday's early morning push high, right? If we do start to slip back, we need those to hold and set us up to push through and fill this gap up to 42.27. We also have a previous gap, so we'll be taking out 2 and 1. Have that daily 15 to deal with around 42.10. Halfway through the gap. And if we push even further through the gap, we've got that 42.34, much like the 32 over on ES. Oh, SPY. Fought up to and through our zones, stopped at our next key level. So, you already know what I'm going to say. Need this zone to provide support. Yeah. Need that 417.32 to hold. If we do reject and come back, we'd be going long off the zone to get through that key level, which was the high from yesterday. In an effort to, let's see, where's that gap? 422 pretty much fills the gap. And 421.5, but we've got our key zone up above to get to if we can start to take out, finish filling that gap. That's the zone we were trying to get to. We do not have any higher time frames in place. Good on SPY. Square. Square, not doing much. Nice push on Wednesday. Kind of lackluster yesterday as all these squeezes set in. So it can start to push through yesterday's highs to get back to these moving averages above, but with all these squeezes, it'll be a bit of a slow grind. Tesla. Post split, right on back, pretty much to the mean and to the bottom of these higher time frame squeezes. We've got a daily back down at that first Keltner. So pretty clear. If we start to lose the mean, this, what I'm assuming, is a 2-hour and then 4-hour squeeze around 290 and 288. Then we're coming down to the bottom of that daily squeeze where that Keltner sits at 280. But if we can hold, squeeze bottoms, yesterday's lows, the mean, push through the daily 15, daily 8, 200, push through that psych level of 300. We've got our squeeze tops up at 304. We've got that daily squeeze up at 314, the recent high. But we sit in the middle right after the split. She could start to wedge and build up energy. UVXY again. I know I covered it just a little bit over here. But 9.5, like I was trying to say yesterday in prep, need to stay below that to see upside in the market. We got a dump to it and rejected. Daily 8, 15, that 9.5, made our way back down to 9. It's exactly what we needed for an upside in the market. We are in this wedge, so we need to give out wedge bottom, take out 9 and start heading below to see all that upside scenario that we talked about. If we hold wedge, hold 9, start to push back through wedge top, we're going to see market roll as we make our journey back to these moving averages above and 950 and VIX. So yesterday started to break into that gap, came back to retest, got below it, and kept going down to fill that gap. Still has a ways to go to complete filling it. So for the upside today, need VIX to give out the daily 21, daily 8, take out that low, and complete the journey back to the daily 15, which at least gets us back to these highs. Filling the gap gets us almost to this first Keltner down, back at 20.5. So for upside, need to give out the daily 8 and 21 and start setting lower lows. If we hold the daily 21 and start to push back up and take out 22.5, then we are likely going to be rolling over in the market and heading back to 23, 23.33 on VIX. So hopefully this was helpful for everybody. Thanks for tuning in. We'll see everybody in the chat, and as always, no beast, no feast.